floor of the CME, this is Danny Riley with today's MrTopStep update. You know, I was on my way over to do the recording this morning, and just as I left the desk, the word that another earthquake had hit Japan. 7.4 earthquake that not only shook Japan, but it shook these trading floors from the interest rate pits into the commodities over into the index markets. You know, originally what we wanted to talk about was that there was a big decrease in pessimism over the last week and a big jump in optimism in the S&Ps as the bulls went from 5.16% to 57.3%. It's the biggest jump since November 6th. The bears, on the other hand, they went from 23.1% down to 15.7%, the largest drop since 1993. Now, you know, sentiment has a lot to do with what goes on down here on the trading floor. And as the markets continue to go higher and gold approaches the $1,500 level and crude oil at its 107 price, and actually gasoline at the pump at nearing $4.50 a gallon, there's a big question surrounding the markets here. As the S&P goes higher, it's overlooking all these negatives. Now this morning, the S&P got up to 1335, two handles off its year/contract high. And as the news came out about the earthquake in Japan, it sold off from the 32.5 level down to 22.5, and then popped back up to the 1330-ish level and is now around the 1327 level. You know, this is the thing that is really concerning. And the Pitbulls has come out on the telephone over the last couple of days and suggested this, that the markets are very, very unsettled. Despite the fact that the stock market is very close to its contract highs, year highs, you know, there's not a lot of people that have a lot of faith in it. And that's a big problem here down in the trading floor. And we see it as a lot of the retail slash smaller traders are not really in trading that much right now. And you can see it in the volumes. Now, as far as the rest of the day is concerned, we kind of think that the market's in a state of flux here. The fact that the market rallied early, sold off, got hit by this news, you know, we're probably on the offensive here a little bit. But as far as the rest of the day is concerned, we think we're going to see a little bit more back and fill throughout the day as the markets have recovered. But we also want to pay attention to one other thing. The Pitbull's rule about a low, looking for a low the Thursday or Friday before expiration. Now, we do think that the markets are still set to go higher. Whether it's in the next week or in the next few days, we're not sure of that. That double top up at the 1337 level is going to be mixed in with an enormous amount of long-term buy stops in the S&P that go from like the 1338 level all the way up to 1345, and then into our levels where we came out saying last week that we thought that the S&P would trade 1350, and then again up into that 1383 level that we've been talking about. We're still bullish here, but you know what? It's hard to be a bull when things are the way they are. We'll be back with another MrTopStep update.